Welcome back everyone to another Kaspa update. In my past video, we were suggesting that we could be seeing a potential double bottom over here where we're revisiting this boxed up area for another key level of support for eventual continuation up, as we needed to form an EMA repel to invalidate any potential bearish cross, which further confirms Kaspa coming down. We saw the EMA repel happen, and as I always suggest, we need to see a slingshot motion back above to confirm that we are truly bullish and we're not going to see a bearish cross confirmation. So we saw the EMA repel form, and now we've confirmed the moving averages support. That is your specific reasoning for why we're continuing up, and it's following that exact path that we mentioned from yesterday's update. We're going to dive into this chart analysis now, so make sure you stay tuned, like, subscribe, comment and share, so we can hit 7.5k before the end of this year. And yeah, enjoy today's update. Now, of course, we've seen the EMA repel. This is of course bullish, and we're now seeing that continuation. I will get rid of this because it's just in the way. We don't really need it, and so we can see this a little bit clearer. But we saw that it's pretty much listening to what we were suggesting in yesterday's update. It was just coming down for a second bottom on these key Fibonacci levels, and this is where it had to actually take control. The bulls had to take control from this level in order to see bullish continuation, because again, yes, that bearish cross was about to form simply because we did call this double bottom and it reclaimed the moving averages, forming another EMA repel, but you then need to go ahead and hold it as support. We saw the failure in doing so and the confirmation of the 20, and that's why in yesterday's update we were suggesting that we were going to come down a little bit more into this golden pocket over here, the 618 and the 65 Fibonacci, and then this is the area where the bulls must step in and take total control of this uptrend, of course. Otherwise a bearish cross would signal a newly formed downtrend. And yes, it's had its moments of going down, but within a bull trend you need to see this crossover with the moving averages in order to form this bearish trend, and so that never came. It's had multiple chances because we can see price fell below the moving averages, but we need a crossover with the moving averages and we didn't get that. So we climbed back above and we failed to hold it as support. So just before they're about to cross over, we need to reclaim it and confirm it as support. We've had multiple instances where we failed to confirm it as support. However, on this more recent breakthrough where we've formed another EMA repel invalidating any bearish trend, we've come down and confirmed it as support. This is very vital and key for continuation higher. And you can now start to see the double bottom that we were talking about, with this becoming your neckline. And now after today's breakout, confirming it as support, we're looking for continuation higher. If you remember, I stated that we need to break the highest candle close, which is the 786 fib. This sits at 14.5 cents. So we have validated the double bottom here. Its technical target will now be shown, but please understand there is a further level that we must break, which is the 786. And funny enough, our technical target is smack bang in line with the highest body candle close, literally to the exact penny. And so that's a big clue for what's to come. Essentially, it looks like we're going to continue rallying into this key level of resistance where we will fall back for support, and we must find support on the neckline of this double bottom for eventual continuation higher, so Kaspa can reach 20 and then 25 cents in the upcoming future. But understand there's a lot of things for Kaspa to do in order to keep all of those targets valid. So now that we've had this EMA repel, we need to continue to hold above the moving averages, with the 55 sitting at 13 cents. However, as we know, we've broken out of this double bottom, so that becomes the support that we can't lose, 13.3 cents. And now that the target to the 786 fib of 14.5 cents is valid and the target is there at the highest resistance point, it makes sense to actually get a rejection from that point where we fall back to this key level, the golden pocket, where we're looking for the reversal wave to be created. As long as we can hold the 0.5 Fibonacci, which is smack bang in line with the neckline of this pattern, then we should find continuation higher, as long as that neckline is actually continuing to hold, where we will eventually meet these first sets of targets, so slightly underneath 20 cents, but eventually getting up to 20 to 23 cents. But many updates ago I mentioned that there's a specific reason for why we're targeting 25 cents, which is a larger term Fibonacci level. So as soon as we clear this range, we've got these as our next two targets, and we've got these in line with that as further confluence for what we're essentially saying. So just further confirmations for why I believe it's going to be going up there. But understand, take this all with a pinch of salt, as nothing on this channel is financial financial advice. It's just the messages that I'm relaying to you guys from what the story in the chart is telling me. And yeah, you don't want to shoot the messenger. I'm just literally stating what the chart is saying, and I'm reading it out to you guys. So we have to continue now to hold above this neckline for continuation to the technical target, reverse from there and hold the neckline for continuation to an eventual 25 cent 25 cent target, which would be a gain from today's price of, let's go to the 25 cent target, 84%. That's going to be incredible. So us Kaspa holders got very exciting times ahead, but all of those key levels need to hold. So that is it from me today. Like, subscribe, comment, share if you want to get educated so you can analyze this and predict where the market is going, just like me. Use the links down below to head straight to the website or Twitter for more information. Cheers, everyone.